welcome you so much as we do the analysis. Yeah, as we can see here, last time we did an analysis for USD JPY, and as we can see, the market is still moving on our side. This was our projection. This was our take profit for those who watched our previous analysis. But today I want to introduce a whole different thing. There are some maybe who are trading currencies alone. And if you are technical analyst of this market, I want to introduce to you Deriv standard account. And most of the people, they normally trade the currencies, don't know maybe whether they know about Deriv, they know about a safer haven that we can trade in that can help you to make more profit than trading currency alone. One thing about currencies, you only trade from Monday to Friday, and mostly you don't trade from on Monday, you don't trade on Thursday, on Friday, because that is the time the market is closed and the banks are not yet opened. So when you're trading the Deriv standard account, you're able to trade or to ensure that you trade all time. It may be a weekend, on holidays, every time. So if you are a technical analyst and you are good at doing it in Forex, you can also do it through Forex or through Deriv, and you can make some more profit than relying only on currencies, because you know currencies are sometimes not stable, especially due to news. But when you are trading Deriv, they are no news. It is only technical analysis. So let's go here, and I want to show you various elements that are traded in Deriv. So as you can see here, we have Deriv. This is our broker. So we can write here volatility, and from what you can see, all these volatilities, all these, you can trade them every time, and these are not simulated by broker. They are not controlled by the broker or the person who is behind the computer. All these, they measure the liquidity of the forex market. So they are manned by the third party. So you're very safe trading this pair, especially they follow every technical analysis that you do in forex. For example, I want you to take you through the several analysis that you have done before, and you see they follow everything forex follows. So once you understand these concepts, you can be able to maximize your profit and ensure that you get more in trading. So if you're there, you'll be stuck because of news, because of the things happening in the market. This is another place you can also add a profit to. So we have all these jump indices. Maybe some of you have heard about the crash, the boom and crash. So we have all these, the boom indices, all these, we can trade them using the technical analysis. So I want us to go first of all to Forex and see how we can draw using the technical analysis. Then we come here and I will show you exactly how we normally draw them, and you can be able to maximize the profit that you are making. So let's guide you through to open, for example, let's analyze USD JPY. We see how to analyze it, and then we'll come and analyze one of the volatility indices or synthetic indices, and we see how it goes. So same concept we are using here, same concept. So we can see, as we are having the head, these are the shoulders. Like I told you the other time, we normally start drawing from the shoulder. We don't start here, we start from the shoulder. So we are connecting all these supports as we are trying to know where the market will go. So the market is an uptrend, so we definitely buy from here. We're already in this trade, so we bought here, and we are expecting our profit to be here. So if you are a swing trader, a day trader, or a scalper, you can be able to profit from this market only when you are buying. Do not go against the market, like I told you the other time. So from here we can see the projections of how the market shall go using the upper trend line as a way of targeting our profit. So we are using the same concept of supports. You join trend line to the second support, to the third support, to be able to know this market is buying. So let's go to one of the indices and see how we are able to incorporate the same idea of technical analysis into indices to make sure that you maximize on your profit. Yes, as we can see here, we have chosen volatility 25 from Deriv. You go to Deriv. I'll guide you in our next episode on how to open the Deriv account, the standard account. So you can trade through Deriv, the same broker having a standard account that has Forex and indices, all volatility indices, which are also called synthetic indices. So you can be able to trade all these in one account on one broker. So let's consider volatility 25 as we can see here. So the way we analyze Forex market is the same way we analyze this market. So we are using the same concept that we are using in, for example, in USD JPY, we had supports, connecting supports to the next support, and also drawing an upper trend line as a target of where the profit shall be. So this market is in an uptrend, and as we can see here, the market has not yet exactly touched the trend line, so we are waiting for market to hit here and then it will move up. But generally, from how the market has been responding, we can see it touched here, moved up, touched here, moved up. So if you are a technical analyst, we buy low and sell high. So we could have bought here, come out from this place, bought here, come out from this previous resistance. So the same concept that you can see here, the market is moving up, moving up, moving up. So once the market hits this point or touches the trend line, this market obeys technical analysis 100% because there are no fundamentals here. So therefore it gives you a better edge to be more profitable, and again to incorporate a weekend advantage. Another example here we have volatility 75 1S, we can see here. So the same concept, like I told you, this market was in a downtrend, as you can see. So like we have Forex, the market follows the trend line. So let's see, the market was in a downtrend, as you can see, the first touch, second touch, third touch, and then it broke this trend line. You can see it broke here the trend line and it retested. So therefore it tells you this market is following technical analysis 100%. So after breaking that channel or breaking that trend, we can see we have double bottom, the same way we have in Forex, double bottom. So from here we can see this double bottom, it initiates or tells you this market is now reversing. So when market reverses, therefore you should not continue going down. We should now draw an uptrend channel to try to project as much as you can to know where the market shall go. So let us try to expand this chart. We can see here, this is what now we are having. So you see this market is touching support and moving. So we are already in this trend, we took it here and we are expecting it to reach to this point. So once you're trading this market, the advantage that you have, number one, is that this market moves all the time. You don't have weekends, you don't have holidays. You're able to maximize, especially if you are experienced forex trader or you are also a beginner. This market gives you a chance to trade all the time because it has no weekend, it has no off days. Another advantage, this market has no fundamentals. In as much as it is technical all through, it has also its own disadvantage. But this market runs only on technical. There's no way you hear their fundamental, their news that came, and this market moved from here to here. No, this market moves on technical, and if it's all about technical, then you can be able to project and to predict it. For example, let's see one of the pairs in the forex market. Let's analyze one pair, and then you see it is the same idea that is here. We can use it in trading indices. Yeah, let's do Euro USD. So we can see from the chart, Euro USD has been, it was on an uptrend, then it broke the trend line, we can see, and after breaking it retested. The same concept I'm telling you that is in indices. But the problem or the issue, this market, we are on a weekend, so this market is not moving. You see, maybe if this market was here, probably if it was indices, it could be somewhere here. So it therefore gives you a chance to have more profit. So we can say this market was an uptrend, then it formed a head and shoulder. So from there the market turned, and now it's on an uptrend. As you can see, we are expecting our profit to come here to the neckline, because that is where our trend line started. So comes that way to this point. So we can try to zoom out and we analyze this market. We had already done an analysis. So when you are doing trend, like I told you in the USD JPY, we normally start from the shoulder. Do not start here. Most people will do it wrongly. They'll start drawing trend line from here, and then the trend line will come somewhere here. That will be so wrong. So you start from the shoulder, join this shoulder, join this shoulder, join the resistance. So because we want to project where the market will go, so we can be able to take the profit, we normally do the second trend line. We can use the equidistance channel, or we can use trend line. You can be able to draw them if you are good at it, but if you are not, you can use equidistance channel or the parallel channels to draw them. So from here we can see the market touched here. So we started here, we draw from this point, we join the second support and the third support. So Euro USD, as at now, it is selling, it is on a sell. So our projection of our take profit is somewhere here. We are doing here because that is the previous support in the trend line that is here. We probably zoom it out. Sorry. So it's probably here. So that's where we are putting our take profit. So let's get back to our channel. So drawing from this point, you'll be able to predict where the market will be going. Mostly we use trend line because it is simple to draw. You don't need to use any indicator when you're drawing these things. They are just simple. Trading is not complicated unless you make it to be. So if you are there, you are a new buyer, you are maybe someone who will be using another strategy, you can try trend line, equidistance channel. They are so good. They can predict the market and be able to know where the market will be going. So I was giving you an example of what we are using in indices, and the same concept you're using it in currency. So you're there, you've been doing forex around currencies trading. You trade for Monday, Tuesday, Wednesday, Thursday. On Friday maybe you try your luck, and then on weekend you're not trading. This is another place that you can be able to maximize your profit, maximize your skills by trading the Deriv. Let me get back here, the volatility indices in Deriv. So all these, they are here, they are gold mines. So do not settle for currencies alone. This one can be able to make you more profit. They are more volatile. Actually, I never told you, they are more volatile. They can be able to make more profits than currencies, because currencies, maybe on Monday the market is so slow because the banks are not yet opened. On Friday the banks are closing, so you only trade on Tuesday, Wednesday and Thursday. So I give you another chance here. Maybe some be knowing about Deriv by trading the other rise and fall and all that, but all these, they are synthetic indices which have the same simulation like forex, and you can be able to maximize your profit. So I'm introducing to you, if you are a technical analyst, or you are a seasoned forex trader, or you are a new buy, you can start with this, because they use the same concept, only that they are more volatile, they are on weekends, and they give you a more room to exercise your experience or your know-how. Yeah, so basically this is what I thought I would share with you. Yeah, so you can see this, they are simple to draw, simple to understand, using the same concept. You've been doing trend line, or you've been doing the quasi models, you've been doing support and resistance, you've been doing what any other strategy you're using. This can make you very profitable. For example, if you see the market touch there, another touch, so this market definitely it will reach here. So if maybe it's currency, if you bought here, probably it may take a while before it reaches this point. But because this market, as you can see, it is already live, it is already moved, because in as much as it's a weekend, this market is still moving. So once you maximize on these volatility indices, you can trade both currencies and trade indices concurrently and maximize your profit. So I think that's for now. Next we'll be teaching you on how to open a Deriv standard account to incorporate forex and indices to maximize your profit. So if you have not yet subscribed, I will invite you to subscribe to our channel as we continue this journey together. Yeah,